Welcome to the show. I'm joined by Matt Brown. Morning to you, young Matt.
Good morning.
Right, let's kick off with the headlines this morning. Markets higher, FTSE above 7,500 and Euro GDP in focus. Markets back above 7,500, surely not, sir.
Well, look, I mean, the FTSE's been lagging. You look at the Dow, you look at the DAX, you look at other major global indices, and the FTSE's just been the kind of ugly little sister or brother or whatever. It may come a point where value hunters in the market, if the global economy continues the way it is, there'll come a point when people will say, look, you've got a bit of risk premium priced into the FTSE, but with 75% of it being international companies, hang on a minute, why aren't we invested in the FTSE? And it does feel, I mean, and again, it's a global economy play, but valuation hunters or value hunters are going to look at the FTSE and say, do you know what, 2018, it could be the FTSE year. So look out for that. Above 7,500, it's tested these levels before. We see it kind of peaking around 75.50, coming back down.
Yep.
You know, maybe we can get a bit of momentum behind this. But again, you know, Bank of England this week, if the Bank of England does disappoint, we could see the pound lower and the FTSE higher, and that could be the catalyst.
Well, it was very interesting. Tim Young on the previous video said that the FTSE was due a very gentle pullback to basically because the momentum was a bit stretched before it goes off to the new leg. Okay, part one has happened. Maybe the new leg up is about to occur. We shall see. Okay, so let's move on to one of the main constituents. BP numbers this morning, share buyback.
Yes.
Obviously a big weight on the actual FTSE 100.
Yeah, I mean,
itself.
that's part of the reason we're seeing the FTSE push above that 7,500 level. BP, good numbers. Profits doubled. Their Q3 numbers all look, you know, fantastic. Beat expectations, as you rightly say, a share buyback, which will always support and put a bid under stocks. Income owners of BP probably a little bit disappointed. They're seeing the share buyback, but they're not seeing an increase in dividend. And this, I mean, BP it's a good story, and this is on the back of oil hitting $60 a barrel. This is the highest since 2015. So, you know, the underlying story for oil is actually quite positive, despite the fact actually we're seeing the dollar push a little bit higher. I mean, there's a lot of this is about people hedging and expectation going forward. So that's why we're seeing oil push higher. But also OPEC as well. It looks like they're going to extend the cuts, and that again is putting a bid under oil. BP, major producer, it's a stock probably everyone owns in some shape or form in a pension or somewhere, but you know, it might be an opportunity to top up. Things are looking a little bit rosier for BP again.
Okay, let's move on to AIM one to watch, Caspian Sunrise.
Again, still in the more exploration and production side of things. This is an oil play, formerly known as Roxy Petroleum, quite an interesting one for investors over the years. But look, we spoke about it last week. They've had an announcement. Production is going well at one of their wells in the BNG in Kazakhstan.
Yep.
We've had the chairman on this morning interviewing with us, exclusive on Core Finance. That'll go out later today, so make sure viewers watch that. It's an interesting stock and an interesting stock going forward. Maybe a dividend payer themselves in years to come.
There's a thought. Right, currencies in terms of the Great British Pound against US dollar, ticking up 132.07, and the Euro Great British Pound cross 88.11. All eyes on Mr. Carney.
Yep, looking to Thursday, we may see some volatility around this 132 handle and cable over the coming days. That's to be expected. The market's pretty much priced in 90% a rate hike. But
pretty much
indeed. But there is the risk they could disappoint for various reasons. So look out for that. I expect some volatility around the currency pair if we see the rate hike. I don't expect it to move too much higher. If they don't hike, it's going to be sub 130.
Yep. Couldn't disagree with that. Okay, in terms of the core numbers, 75,000. What number is that?
Well, this is actually, speaking of the Bank of England, this is the amount the Bank of England have put, you know, workings on the back of a fact packet. 75,000 jobs in the city could be lost, directly involved in finance. Now, Xavier Rollet, the outgoing executive of London Stock Exchange, has put the number at 200,000. The Bank of England said that's too high. But the worrying thing, I mean, 75,000, that's a huge amount of jobs to go. And it all depends on the hard Brexit, and the Bank of England have stated that if it's a hard Brexit, we could lose these number of jobs. That's, you know, where they're going to go. Are they going to go to Switzerland? Are they going to go Frankfurt? Who knows? I personally think they'll stay in the UK. It depends on the passporting and certainly transactions, exchanges, etc. You can still have people on the ground here, but operating via passports into Europe. So let's see how that works out. If they do lose their jobs, though, and you've got to look at it as well, the labour and the amount of people that are employed in industries, the restaurant industries, the entertainment industries, how they'll be affected. Well, actually, these people probably won't work in London anymore. So you could see
domino effect.
Yeah, but you could also see an investment banker serving you coffee in Starbucks in the years to come.
That would please a lot of people, I guess.
Probably getting the order wrong as well.
Boom, boom. Okay, let's wrap up with the economic calendar. In terms of the EU this morning, European GDP, Q3 preliminaries.
Yep.
In Canada, GDP month on month. And the US, we've got the Chicago Purchasing Managers Index. So not a huge day on the macro front.
I mean, the GDP in Europe is just hitting the tape now, so we'll check that out. Chicago Purchasing Managers Index expected to be a lot lower than expected from last month. Check that out.
Yeah.
Obviously, we've got the Fed this week. It's actually one of the lighter days on a very heavy macro-based week.
Okay, well, two little headlines to finish this segment off. Morrison's leads way up as milk goes up by 10%. I don't remember the last time I saw inflation like that. And finally, the Claridge's Xmas parcel. Claridge's Hotel in London is creating a Christmas hamper for the first time in its 151-year history, including chocks and fine wines. Guess how much? There's a choice of three hampers.
I think the top, I have actually read this article, I think the top one was around £900, the middle one about 500 and 300. On the milk thing though, just to note, there has been a milk price war going on with the supermarkets, and actually this is bad for dairy farmers. So actually,
I read it was good for dairy farmers.
It's good now the prices are rising, so they're not going to be as squeezed as much.
Yep.
So hopefully, albeit we've all got a better hand in our pocket, but it's about £1.50 for a 4-pint carton, which is actually fairly cheap. So I think we could all afford to pay a little bit more to keep our British dairy farmers in business.
Matt, very good. Thank you.